So this is exciting. Okay, folks, we've got a lot to jump in today. Today is obtaining an excellent bank rating. You know, this is really important because we talk so much about building your business credit, but a bank rating is actually different than business credit. So there's really three types of credit that you're always looking to build when it comes to your finances. You got your personal credit, you got your business credit, and you got your bank rating, right, Ray?
Exactly. Yep.
All right, so you're listening, making sure that we're coming through
just checking the
loud
sound.
and clear. Yeah, I always like to mess with him right when he's doing some technical thing. So, folks, we're going to jump right in because we got a lot to cover in a very short period of time to do it. So thank you for joining us for Thinking Outside the Bank, where we spend 30 minutes with you on your lunch break, helping you to learn some of the inside and out tips and tricks of how to fund your business, how to build business credit, how to get access to more capital for what you do. All right, so my name is Joseph Smith, and this is Mr. Ray Fleming. We are the Wise Guys in Ties, wise in the ways of helping you start, build, and grow a business, get access to business credit, financing, reduce debt, save money on taxes, increase your cash flow. All these things are what we help our clients do. Our contact information is on the screen for you. Reach out to us. Go to our website. Check out what we have to offer. Schedule a free consultation if you need to. So let's talk about business bank accounts. It is essential that a business owner separate their personal and their business banking. This is critical in running a successful business. One of the major financial tools used to accomplish this is a business bank account. Now, a business bank account helps maintain accurate records, prepare reports, make deposits, withdrawals, wire transfers, issue checks, and much, much more. So this is pretty simple. You know, you got to have a business bank account. You know, we were talking earlier this week about how shelf corps and stuff like that, where people look to the start date of the business. But when does the business actually start, Ray?
The business really starts when the business bank account is established. I mean, there's a lot of different starting points, but for example, if you've been up and running for 10 years and still moving funds in cash or through your personal account, well, the bank doesn't think you actually have started your business.
Exactly. So let's talk about business bank accounts some more. So whether a business owner decides to open an account with a national, regional, or local bank, or a credit union or community bank, they should select the bank that best caters to the needs of their business. This is really important because so many people, they're like, oh, should I open it with a big bank, a small bank? What should I do? Well, you know, there are a lot of banks out there, and they specialize in a lot of different things. There can be small credit unions that work with small businesses. There could be credit unions that work like with, say, a teachers union. I've seen like things like that. There's community banks that really want to help retailers. Or so if you can find a bank that specializes more in what you do in your industry type, that's only going to help you succeed even better.
Oh, absolutely.
So crucial. While every bank offers various types of financial business products, each serving a specific need, one thing remains the same throughout, and it is your bank credit. So what is bank credit? Well, let's talk about that. Bank credit is the total amount of borrowing capacity a business can obtain from the banking system. All right, so this is not the same as business credit, which I said earlier, because business credit is much broader in its category because it services lenders and suppliers, credit card issuers, and leasing companies. So we're just speaking about specifically with the bank. A lot of what we do is thinking outside the bank, but that doesn't mean that we avoid the bank. We use the bank when it makes sense. And if you can build good bank credit, then working with the bank will make sense more and more often. But a lot of people don't even know how to build bank credit. And so this is just not an option for them because the bank doesn't have anything to offer them, or the terms are really bad. So we're really going to unlock the mysteries of bank credit today so that because especially with what's going on in the economy and how banks are tightening down, if you could learn the secret code that the bank wants on how to release funds for your business, this could be very helpful for some people. Because imagine if you could just make a few changes that we talk about today with how you conduct your business with the bank, it could get you lower interest rates, longer terms approved for loans or credit cards or a line of credit.
Oh, yeah.
This is very important. All right. So let's talk about bank credit. Now, a business can secure more business credit quickly as long as it has a minimum of one bank reference and an average daily account balance of at least $10,000 for the past 3 months. Now, again, it seems like we're flipping back and forth. You're talking bank credit, but now you're back to business credit, right? Because they all work together. You need, if you really want to have a robust credit profile, you've got to have good personal credit, and you've got to have good business credit and bank credit. All of these combined help you access the maximum amount of borrowing that is possible. So business credit alone isn't going to get you access to all the money you want. Personal credit alone won't do it either. And bank credit alone won't do it. If you have a perfect mix of personal credit, business credit, and bank credit, you can actually access all of the lending products that are out there that are available to your business. So we're trying to focus right now on bank credit, but there is a relationship between all of them, because your personal credit can guarantee your business credit, and your business credit can actually, if you have good bank credit, that can also help you secure more business credit. So the more we build our personal credit, the more we build our bank credit, the bigger we can build our business credit, because business credit gets us access to the most amount of money. But again, think about like building foundation upon foundation. You've got to have your first layer, your personal credit, then you want to have bank credit as your next layer, and now you have a strong enough foundation to really build up your business credit. Does that make sense?
That absolutely does make sense. Really, it's having a strong foundation.
So when you have a minimum bank balance of at least $10,000 for the past 3 months, this yields a bank rating of what's called a low 5, meaning an average daily balance of at least $5,000 to $30,000 is in your bank account. The low 5 is the best bank credit rating that you can get. It's what you want to have for your business. Now, lower ratings, such as say a high 4, that balance of 7,000 to 9,999, that these lower ratings don't put a stop to any time if you apply for a bank product. They're not going to say no, but it slows down the process. You might not even get approved. Well, if you do get approved, you won't get approved for as much. You'll have, you talk about it all the time. It's all about risk, right? So the lower your bank rating, the higher the risk, which means higher fees, higher interest rates, shorter terms, lesser amount of principal borrowed.
And it takes time to establish that relationship with the bank. Not only is it the rating, but let's say that you have an influx of capital, or you bring on a new partner. They can put the hold on those funds for a period of time. The better your bank rating, the less likely they're to hold your funds for an extended period of time.
That's right. So let's talk more about bank ratings. This rating is the average minimum balance maintained in the bank account over a 3-month period. A $10,000 balance, if that's your average or more, will rate you at a low 5. $5,000 rates you as a mid 4. $999 rates you as a high 3, and so on. In fact, the main goal should be to maintain a minimum low 5 bank rating, $10,000 for at least 3 months. Unfortunately, without at least the low 5 rating, most banks will assume that the business has little ability to repay the loan or a line of credit. So that typically means you might be able to get something if you're, a medium 4 or something like that. But the lower the rating, they're just not going to give you anything. Or if they do give you something, it'd be like a $500 credit card. You know what I mean? Like, oh, great, thanks, appreciate that. That really helps. So on your screen, if you can see, these are the actual bank ratings. You got the high 5, the mid 5, the low 5, the high 4, the mid 4, the low 4. And so really, you're going to get approved for your best, for everything if you're at the high 5. The best rates, the best products at the best interest, the high longest terms, highest amounts. So, but account balance of 70,000 to 999,000, right? So account balance, you see the spreads that are right there. So low 5 is the absolute cutoff. But if you have a high 5, yeah, let's give a high 5, man. Oh man, you have the inside track. So hey, if you can just keep $100,000 in your bank account at all times, which we have one of our businesses that does that, and they're always just offering us free stuff.
I know. We gotta go do something with that money.
but the reason why we do that is because one of our accounts, we want to have a high five, but I mean, we have most of our accounts though, we keep at least the low five.
Right.
But one of our accounts, we have the high five. And so that's really great, especially when you want to get access, because the bank, they really want you to, they want you to take advantage of more of their properties and their products. Hey, Larry Phelps is in the chat. Hey, good to see you, Larry. Welcome. All right, talking about bank ratings. Business owners should do whatever they can to keep at least $10,000 in their account over a 90-day period. Critical. The money should be kept there just to ensure the bank rating is high enough to increase future financing approvals. Each cycle is based on the balance rating during the previous 3-month period. So before a business decides to apply for credit, it should keep a balance rating of low 5 for the past 3 months. So if you're thinking, hey, I want to borrow some money, I want to get some funds, well, make sure you build up your account to $10,000, have that there for 3 months, then apply to your bank for whichever the line of credit or the loan is, and watch how you can get approved very easily.
Mm-hmm.
Now, a lot of people, I mean, if you have a business and a lot of revenues moving through, if you can just make a couple of shifts and use and just keep. So sometimes we don't even realize, if we don't even know about these bank ratings, you could be at like, oh, I have 9,500 in there. I should just left an extra $500 in there,
Yes.
and I could have had the low 5.
Could have changed the entire situation. Yeah.
Absolutely. So it's also essential that the business owner ensures that their business bank accounts are reported exactly the way all their business records are, with the exact same physical address. Remember, we talk about this with building business credit all the time. You don't want to use a post office box. And so you need to make sure that your bank has your accurate physical address and phone number, because businesses, they tend to move sometimes and you change locations. And sometimes we forget to update that information with the bank. And so when the bank, you go to apply for any type of bank loan, well, they pull the records, and if it doesn't, your address doesn't match with what's with the Secretary of State or what's with the IRS, then now because the underwriters are looking for any reason to just not approve you.
I feel out of all the things and documentation that have needed to be changed the most, I feel like it is address. Personal address. If you're a manager on this and your address is always changing, or you had this. This address.
You were at a home address, then you got a virtual office, then you actually grew to your own actual office.
I know that. I'm sure that we have addresses right now that need to be corrected somewhere.
Oh, man, well, especially with our clients. So we're still talking about bank ratings here. It's vitally important that every credit agency and trade credit vendor and every record keeper, financial records, income tax, web address, email addresses, directory assistance, also list the business name and the address the same way. See, a lot of people don't realize that you actually, even if you don't pay to be in the 411 directory, eventually you'll end up in the 411 directory. But what do they have recorded as your phone number and your business address? If you never check, see, the banks are going to check, right? They're going to check. If you filed with the IRS, but you used a certain address with them that's different than what you're currently using, all of this information they're going to use to help verify. If you have a website or your email address, they're going to verify that information as well. So as long as everything right down the list for your business is accurate, and if you say your vendor, so let's say you have your website with GoDaddy. Well, what did you list with GoDaddy as your phone number, as your business address? Because that could show up in somebody doing a back records check. And if you've got a different address or billing listed with them, that could throw things off as well.
Oh, yeah.
All these things show up. So it's all these things are important. So no lender is going to stop to consider all the ways that a business might be listed when they look into your business for creditworthiness. So think about this. If your business is Fathers and Sons Moving Company, is that father ampersand sons? Is that father in the word spelled out and sons? Or is that the father in the letter N and the sons? So, it could be inconsistent all over there. Father and sons, or father and sons. And so if anything doesn't match, you're gone. You're gone. You lost your bank credit. You lost your business credit. So you need to make sure that you keep this totally where it needs to be at. and that is keeping everything accurate all the way. So if the bank can't find what they need easily, then they simply just deny the application. So here we are still talking about bank ratings because this is very important. It is also essential that a business manages its bank account responsibly. This means that the business should avoid writing non-sufficient funds checks at all costs, as it destroys your bank rating. Just one, boom, it's gone. You go like all the way down to zero. And I mean, it's almost like you just need to start all over with a new bank account because you've lost the trust with that bank.
No. Then we have to start all over.
Non-sufficient funds checks are something no business can let happen. All right. It's even a good idea for a business to add an overdraft protection to their bank account as soon as possible to avoid NSFs. So it's also very important that a business show positive cash flow. The cash coming in and going out of a company's bank account should reflect positive free cash flow. Positive free cash flow is the amount of revenue left over after the company has paid all of its expenses. So when the account shows positive cash flow, it indicates that the business is generating more revenue than it used to run the company. So that's a good sign. That shows profitability. Now, it's important also to recognize that banks are motivated to lend to businesses that have consistent deposits. A business owner must also make regular deposits to maintain a positive bank rating. So if you have a bank and it just has one major deposit every month or two, that's not as good as a bank that has 6 or 10 different deposits that are coming in. Right? We want to see at least a minimum of 6, but the more, the better, right? It is vital that a business owner make a lot of consistent deposits, more than withdrawals that they're making. That doesn't look good. One major deposit, but 12 withdrawals for the month, that doesn't look good. So your bank credit. Bank credit is not only based on monthly deposits and your bank rating, your check history, but it also includes the age of the account, the bank products that the business uses, and any savings account or investments that the business has. So a seasoned bank account shows the stability and longevity in the eyes of the lender. Keeping a healthy and long-standing relationship with a bank is also crucial for all companies. A good, stable relationship with a bank that reflects longevity will be highly appreciated by lenders, considering that it's lending that business money. So pretty simple. The longer that you have that established bank account, then the more that you can borrow, right? So now we're talking about, hey, you need to be using bank products. So what are they talking about there? Your bank rating will be higher the more of the bank's programs you use and maintain and pay as agreed. Having an investment in the savings account will help your bank rating. Having open loans or even open CDs help your bank rating. You know, we do that with our bank. Each of our accounts, we open up savings accounts, right? Not that we necessarily, but we use the savings account as overdraft protection. And then we also, but I mean, we make deposits into those,
right?
Which then helps the bank rating.
Exactly.
Perfect.
That's the best way to go about it.
So bank ratings are higher the more banking investments and savings accounts you have. The higher the bank balances in those accounts further helps bank ratings. So make regular deposits into these accounts also helps your bank rating. So the more activity, the more you use, the more the bank is making money off of you, then the better your bank rating is going to be, right? So beyond just the bank rating, a business's bank should also act as a trusted advisor that can assist in growing the business. It helps a business to consider working with a financial institution that specializes in providing banking services tailored to that specific industry. The more services a bank offers that a business can take advantage, the higher the bank rating will be. You know, I think about it like this, like some businesses, they cater more to e-commerce, right? So if what kind of businesses would benefit from banking with an e-commerce bank?
Well, Amazon stores, eBay sellers, websites, shirt online retailers, Etsy stores. Really nowadays, that's so many banks are trying to hop on the e-commerce bandwagon. Even Amazon is starting to come out with its own lending instruments for Amazon sellers.
That's right. So if you find yourself in a situation where you're like, wait a minute, I actually do a lot of e-commerce. Should I go open up with a traditional bank, or should I look for some of the banks that specialize in e-commerce?
Specializing in e-commerce. A lot of these online banks, for example, PayPal.
They're going to cater more to my needs
Right.
and offer me a lot of solutions.
Right.
That's right. So working with a lender that already understands their business makes it much easier to get a loan approved, or, compared with other lenders who maybe they just don't even understand what you're doing. This is because the majority of lenders have, see, I just got ahead of myself. They have a difficulty assessing a business's credit risk of most small businesses or any industry that they know little about. So some of the big banks, maybe they're more about a retail or an actual brick and mortar type of business, mom and pop shop, right? But another bank that specializes in like we talked about, the e-commerce, they're going to streamline a lot of your applications and make things so much easier. So many banks have niches or industry types that they just work better with.
That's one of the really important aspects of, when we're talking to folks about their business and what really is available as far as funding, they'll go to the bigger banks. They'll go to Chase or something like that, and they say, "Look, I got denied." Well, a lot of times you have to go to the secondary market. There's a lot of lenders out there that really just work in that area that you are looking to get funding in, and we can help folks do that.
Right. I mean, you got regional banks, community banks that might say work really well. They cater to farmers, right? But you go to the big banks and they don't really cater, right? So, I mean, you've got to find, if you have a certain industry type or a niche, go out and find the banks that are friendly to you, because that's the big mistake I think a lot of people make, is they just say, well, there's a Chase Bank down the road, or, oh, there's this credit union over here. So they just go to whatever local or convenient. And whatever local and convenient doesn't necessarily mean that they're going to work with you on what you need, which is why so many people have so many horror stories like, oh, they just won't work with me. This bank is horrible. That bank, I'm never working with that bank again. Well, that bank, they probably don't want to work with you either, if you think about it. So
that's a good point. That's a very good point.
You really want to be in a relationship with your bank where you're just like, oh, like we've got our bank guy and we just like call him up and everything is smooth and everything gets taken care of.
It's a good relationship. It didn't happen all right away though. I mean, I did like the guy right out the gate, but it's grown over time.
While profit and loss statements, tax returns, business credit, personal credit checks are common requirements in the lending process, it's much easier for a lender to underwrite the business's financial risk when it truly understands and specializes in making loans to a company in an industry that they are familiar and comfortable with. I mean, that's basically what we've been saying this whole time. So building exceptional bank rating means having a good bank rating is essential to securing bank financing. Ensure that you keep your bank balance average over the past 3 months as high as you can, preferably over 10,000, because at least you get the low 5. I mean, if you can get mid 5 or high 5, I mean, you're golden. But low 5 is usually the cutoff for where they're going to approve you, because if you're below that, they're just not going to approve you for any banking product. Ensure your account doesn't go negative and that you incur NSF charges, as these will destroy your bank rating. And there really is no way to recover from that. I mean, you could build the account back up, but they're always going to look at that history. And that one NSF fee is enough to make an underwriter nervous before they lend you $350,000 or something, right?
Oh, yeah.
So, take advantage and use the other services that your bank offers, such as CDs, savings accounts, and other investments. It's really easy to open up a savings account, link it as an overdraft protection to your main account, provide you that extra protection for the NSF charges. If you have other strategies like a CD that you could turn into a secured line of credit, and you could use that could help maybe sometimes build business credit while at the same time helping you take advantage of a bank product. But I mean, you don't want to just open up a whole bunch of bank products. You got to make sure it makes sense and that there's synergy between what you're doing and what you're trying to accomplish with the bank.
Yeah. You
agree?
I absolutely agree.
Open your bank account when your corporation starts, and leave it open, as this longevity will help your bank rating. This is a key step that we have so many people skip. Like, well, I'll get around to that. I'm just not there yet.
So all the folks out there that have a business, that don't have a business bank account yet, when is the good time to start that?
Yesterday.
So guess what, folks? If you don't have your account, guess what you're doing tomorrow? Yep.
Or opening your business bank account. Make consistent deposits on a regular basis. We recommend at least 6 deposits or more, but honestly, where you want to be is you want more deposits than withdrawals every month, and you want to end with a positive bank balance. Ensure each month ensure that each month you have good cash flow through your account by regularly putting into the account more money than you take out, which is what I just said. So, building an exceptional bank rating. Look, taking these steps will ensure that you have an exceptional bank rating. An exceptional bank rating means your business will have a great chance of being approved for your bank's financial products, including loans, lines of credit, and credit cards. This is such a critical training for today. If you think about the economic challenges that we're facing, some people feel like we're headed into a recession. Well, you want to know something? We might head into a recession, but whether or not you choose to participate will depend on whether or not you want to build an exceptional bank rating, because most businesses will not take the time to build that bank rating, and they will then have to participate in a recession. But if you take the time and the steps to build your excellent bank rating, to build your personal credit, to build business credit, and you have all three, then you only have to participate in a recession if you want to. Because most people, when you take care of your credit the right way, you have credit when everybody else has all their credit dried up because the bank restricted or they closed accounts. You still have liquidity because you're making the bank money, and the bank is going to make sure that everybody that's making the money has access to money. It's really that simple. But at the same time, they don't teach this in school, Ray.
Oh, they do not. Not traditional school.
No. So, folks, if you're interested in saying, oh, how can I build my personal credit? How can I build my business credit? How can I get a better bank rating, right? Well, come and work with the Wise Guys in Ties. Our clients, we help people start, build, and grow a business. We help people understand the ins and outs of your bank rating, or we help people learn how to use their personal credit to enhance their business credit. Because there's a right time to use your personal credit, and there's a wrong time where you over leverage your personal credit, and then your business begins to suffer, as well as your personal finances. Let's not that happen to you. Let's do things the right way. And if you haven't started a business, well, it's time to start, right? Why let your finances be at the whim and control of somebody else, right? Are we waiting for a bailout from the government? Is that going to come? Maybe not. I mean, and
can't bet on it.
Will it be enough?
I still haven't even gotten my first stimulus check.
So folks, I mean, there's so many people who sit there and they feel paralyzed because am I an essential worker? Is my business going to be shut down? Do I get to work? Have my hours been cut back? Look, we've been downsized, right-sized, homogenized. I mean, everything but, I mean, if you let other people control your fate and your destiny, you will always be full of anxiety, fear, worry, and doubt. But if you learn how to take control of your own finances, personal finances, business finances, if you learn how to get an excellent bank rating, then you can begin to create an economy that you can control. And so you don't have to wait for a bailout from the government. You can begin to fix your own finances. And imagine being able to take this information and help others. If you find anything that we're talking about useful in any way, I want you to go on. If you're watching us on YouTube, make sure you give us a like and subscribe, because this is intended to be information that's a blessing to you and a blessing to others. And when you like and subscribe, or you share this content, then it tells YouTube that this is important stuff. And then we can help get this information out. I was talking to Ben earlier in the webinar saying, we're trying to be a rising tide that raises all boats. We're all in this together. And I don't want to go through a recession. I don't want anything bad to happen to the economy. And so if we can all learn how to manage our finances better, then we don't have to. We can do this together. So folks, we want you to reach out to us. If anything here is appealing to you and you're like, yeah, I need to learn more, I want to work with you guys, our contact information is on the screen. Reach out to us. You can contact us, get a free 30-minute consultation. Let us know about where you're at personally, personal finances, or your business, and let us see if we can help find you the right vehicle, the goals. Maybe we make a referral to a loan officer to help get you some direct funding. I mean, there's so many things that we can do to help you out. Don't suffer in silence, right? There's so many solutions out there for people who are willing to take hold of their future, right? Don't sit back and passively wait and let other people decide your future when you are fully capable of learning this information and taking advantage of it for yourself. So Folks, that's all I have for you today. Thank you for joining us on Thinking Outside the Bank. My name is Joseph Smith, and this is my business partner, Ray Fleming. We are the Wise Guys in Ties, and we want to say thank you so much for joining us. Good night, and God bless.